I'm Selena Wang, and for Emily Chang in San Francisco, this is Bloomberg Technology. Coming up in the next hour, Facebook's user growth is its slowest since at least 2011, and revenue growth rates decline. We'll dive into the third quarter results. Plus, Apple's big hardware overhaul. The tech giant revamps its MacBooks and iPads for the first time in years. But is it just too little, too late? And T-Mobile's third quarter earnings are out. What the upbeat earnings could mean for the carrier's potential acquisition of Sprint. But first to our top story. Facebook shares fluctuating in late trading after reporting third quarter earnings. The social network reported revenue that missed Wall Street expectations, a sign that privacy scandals, data breaches, and other problems continue to take a toll on the company. Yet Mark Zuckerberg still seems confident in the press release, stating, quote, "Our community and business continue to grow quickly, and now more than 2 billion people use at least one of our services every day. We're building the best services for private messaging and stories, and there are huge opportunities ahead in video and commerce as well." The earnings call is just starting. We will bring you the latest headlines as they come in. Joining us to go through the earnings report, Economy CEO and Bloomberg contributor David Kirkpatrick. Also with us in Seattle, Deborah Aho-Williamson of eMarketer. David Kirkpatrick, last quarter, Facebook already warned us that there was going to be slowing growth, rising costs. Were things quite as bad as investors expected?
I think it was pretty much what they predicted, which is reassuring in a sense. I think the question is it enough? But that's a different question entirely. Clearly, they're still capable of being an extraordinarily profitable company. But I think we have to really ask, will enthusiasm for using Facebook and its other properties continue to grow in developed countries like the United States and Europe?
And Deborah, we've got a pretty mixed bag of numbers here. Revenue missed Wall Street expectations, but as David mentioned, profits were better than expected. Can you break down the numbers for us? What were some key highlights?
Yeah, for me, I think although the revenue was a miss, it wasn't a large miss. So that was, I guess, a partial good sign. I think that also we saw a return to a slight amount of growth in monthly active users in the important US and Canada market. We saw flatness in daily active users, which is a bit more concerning, but at least on the monthly basis, we saw growth there. On the other hand, there was some declines in the European monthly active users, again, probably due to GDPR fallout. So again, like you mentioned, it's a mixed bag. I think it's about as good as you might have expected for a company that's been under a lot of turmoil this year.
Right, you were just talking about the user growth. It was pretty flat for daily active user growth. For North America monthly active user growth, there was actually a slight uptick in growth. What's the significance of this? Is this reassuring to investors that things at least are not shrinking?
Well, at least on a monthly basis, they're not shrinking, and I think that is important. And also on a global basis, it's important to point out that Facebook has been able to maintain that solid 66% ratio of daily active users to monthly active users, something that they've had over the past several quarters. So again, they managed to eke that out very, quarter after quarter. If that number starts to decline, I think that's a bigger red flag. But overall, again, I think this is about as good a quarter as you could expect for a company in the position Facebook's in.
Right, and I just want to point out, as we're going live, Mark Zuckerberg has just started speaking on the call saying we have had a solid quarter, but I want to point out that costs are rising. They're up 90% from the same quarter last year. David, what does this mean? Are they spending still on the content management issues? Is this where this 90% increase is mostly coming from?
I'm sure that's the reason it's going up so much faster than it ever has before. I think the company wants to say, simply by spending and hiring, that they understand how serious the problems are and they're doing something about it. But the proof is in the pudding, as we say, and until we see Facebook not having the pernicious effect that it's having on elections and on social dialogue, which is still manifest in all kinds of ways in our country, in the United States, in Brazil, and around the world, I don't think we're going to really be confident that those measures are enough. Nonetheless, it's good they're willing to spend money on it. I fault them, though, for not being willing to talk about it bluntly, and maybe on this call, Zuckerberg will be pressed to explain how he feels and how he thinks about the extremely negative role that Facebook has played in certain aspects of modern society, which they have never directly confronted. But I'm glad to see them spending money.
And Deborah, I'm sure we'll hear more about this on the call, but as David mentioned, there are these societal concerns that are hanging over their heads despite some positive numbers. Are you seeing brand advertisers holding back at all because of the brand safety, security issues we've been talking about?
Yeah, you know what? We have not seen any holding back on major advertisers. They're continuing to spend strongly on Facebook. They're spending strongly on Instagram as well. We're forecasting Instagram will have $9 billion in ad revenue this year, amounting to about 25% of Facebook's overall ad revenue in the United States. So an important and growing part, and advertisers are still very enamored with Facebook and also with Instagram.
Right. It seems like advertisers may be enamored, but users are being enamored less and less. Let's talk a little bit about Instagram, which is proving to be more popular. David, are they starting to really pull that as a lever of growth here?
Well, certainly, if ever numbers are right, then if they're making $9 billion in ad revenue from it, that's a big, big number, considering how recently it was zero. It wasn't that many years ago. I would like to see the company be more blunt and disclose what's really happening with their other properties in some detail, which they haven't done. Clearly, they have a hedge against whatever happens with Facebook. On the other hand, in some ways, even though it's photo-oriented, the architecture of Instagram is very similar to that of Facebook. And many of the abuses that are happening on Facebook are also happening on Instagram. Instagram has more or less been kind of exempt from criticism about it, but that's starting to change. We're starting to hear more and more stories of how Instagram too is being abused for propaganda, hate speech, etc. But clearly, you know, they're doing well with Instagram, and that is good news for the company that, you know, otherwise might not have a lot of good news.
Right, and in terms of things other than the core platform, right now on the call, you can follow on T Live. Zuckerberg is actually talking about WhatsApp and improvements they've made there. And we'll continue this discussion later in the show. eMarketer Principal Analyst Deborah Aho-Williamson, thank you for joining as always. And Techonomy founder David Kirkpatrick, you'll be sticking with us throughout the hour. And staying on earnings, China's biggest search engine Baidu has given a conservative revenue forecast for the rest of the year. It comes amid fears of a slowdown in China's economy and looming trade wars hurting consumer spending and advertising. The company did post third quarter revenue of $4.1 billion, beating analyst estimates, but Baidu's growth has been eroded by increased competition in the search market, and now there's concern on how escalating tensions with the U.S. will impact the ad market. And coming up, Apple gives its iPads the most extensive upgrade since 2015. But will it be enough to reverse falling sales of the tablet? We'll have the latest. And if you like Bloomberg News, check us out on the radio. You can listen on the Bloomberg app, Bloomberg.com, and in the U.S. on Sirius XM. This is Bloomberg. And we're still listening to the Facebook call live with analysts. And Mark Zuckerberg is speaking now. He's saying that Facebook Stories is the future, that the disappearing photos and videos feature Facebook stole from Snapchat. It's very popular on Instagram, but Zuckerberg is admitting that launching it on the core Facebook platform hasn't gone as well as he hoped. We'll continue to bring you the headlines as they come, and you can watch on T Live. Now, Tesla CEO Elon Musk just couldn't wait to get his hands on more of his own company stock. Regulatory filing Tuesday showed Musk bought about $10 million in Tesla shares on the open market. He did so while waiting for the car maker to issue $20 million worth of new stock that he slated to purchase by next week. Apple has given its iPad its most expensive revamp in 3 years as the company looks to revive a product which has seen falling sales in recent years. At an event in New York on Tuesday, Apple executives unveiled new iPad Pro models in 2 screen sizes. However, investors were nonplussed by the hardware announcements, which also included a new MacBook Air laptop and new Mac Mini desktop computer. Shares fluctuated throughout the event. And of course, we're counting down to Apple's fourth quarter earnings on Thursday. Joining us now to discuss the hardware haul is IDC Program Vice President Ryan Reith, and still with us, our guest host of the Hour to Economy founder and Bloomberg contributor David Kirkpatrick. Now, Ryan, Apple unveiled some major announcements, especially to the iPad, but were there any changes that were truly game-changing that you think will actually draw in new customers?
Yeah, I think the design improvements that they made overall were expected, but I think those are overall, they're ultimately design improvements that are drawing consumers in these days, right? So most of this is focused around narrowing the bezels and then focusing on, removing the home button and getting to Face ID, which sort of plays really well into what they've been doing with the iPhone, which has obviously been successful. So I think those design features alone will draw consumers in. And overall, I think it was, a good evolutionary step, I should say, for the iPad lineup overall. I think there's some other things that are inside that have to do with software and so forth that were ultimately probably more important, but overall, I think it was a decent announcement for them around iPad.
Right, David, iPad sales actually peaked in 2014 and the tablet industry has been contracting. Do you think these changes are enough to sort of regain that momentum Apple once had with the iPad?
Probably not, but that doesn't mean that it might not slow whatever decline they're experiencing, or at least flatten it out. Maybe it'll stabilize things. These are not earth-shaking changes. I do think Face ID is a pretty important technology. I have it on my new iPhone, and I find it enormously convenient to not have to do anything except pick the phone up and look at it, and basically you're on it. That would matter to me on an iPad, so I like that. But I don't think it's the right way to think about any of these announcements today as significant game changers in any way. I mean, if it was any other company than Apple, we wouldn't even be talking about it. These are not the kinds of products that generate the sort of excitement that the phones do. That's just a simple fact.
Right. Ryan, let's talk about price increases as well. The 11-inch model is up $150 from the version last year. The top of the line iPad Pro costs more than most full-feature laptops. Is this going to price some customers out of the market here?
Yeah, I think there's no question about that. To me, to me, I sort of take away more of like the ultimate strategy of what Apple's trying to do with their Mac lineup and iPad. And it seems to me like, with them releasing obviously the well-anticipated refresh of the MacBook Air with, I think, what a higher price point than the industry expected, I think sort of puts the emphasis on this as being the most attractive large screen product that Apple has to offer these days. So yes, the price point puts this as a very premium product, but then again, Apple isn't selling pretty much anything in the market that isn't premium, right? So they're driving up costs, but they're adding features, and ultimately, I don't think that will scare away buyers. But I think, as mentioned earlier on this call, I don't think this changes the tablet industry as a whole. It's worth noting that when you break down the tablet industry, there's really two sections. There's one, what we call detachable tablets, which is the iPad Pro, the Surface, and so forth. And that segment of the tablet market has been growing despite the overall tablet market declining. So it's not a surprise that the focus was around iPad Pro. Adding the iPhone features makes sense. And I think they're looking to this to be probably a more productive device in terms of sales overall in the long run than probably the MacBook Air.
And lastly, David, this was the first major revamp of the MacBook Air in many years. I mean, what took the refresh so long?
Well, I think that they've been focusing on the iPhone because that's where the big money is, probably. But I just wanted to mention, Brian just mentioned the Surface. I think we have to give Microsoft credit. They have done a more revolutionary set of changes in the way they've sort of morphed the PC and the tablet into one device that basically serves as both. It's surprising to me that Apple hasn't done that, and that we don't really see a device that is effectively a touchscreen laptop, which I think I and many millions of users of Mac products would like to have. So in that sense, I would call an announcement like today's a disappointment.
Well, David, we'll have to see if that comes true for the next product refresh. Ryan Reith of IDC, thanks for joining us. Techonomy founder David Kirkpatrick, you're sticking with us. Coming up, while this year's sell-offs have sent cryptocurrencies like Bitcoin crashing, Coinbase has soared in the other direction. How it's managing to stay afloat in the crashing crypto market next. Back to the Facebook analyst call underway now. Facebook shares are back to being flat again in after-hours trading. CEO Mark Zuckerberg says he will add advertising in Instagram Explore. He also mentions YouTube as his primary competitor on video advertising. Take a listen to what Zuckerberg had to say about the quarter as a whole.
We had a solid quarter, and our community and business continue to grow quickly. 2.3 billion people now use Facebook every month, and 1.5 billion every day. Revenue grew 33% year over year to $13.7 billion.
eBay's third quarter earnings are now out. The company grew active users by 4% across all platforms for a total of 177 million global active buyers. Cryptocurrency has tumbled more than 70% in the last year, but that doesn't mean there's no money in crypto. Even in a bear market, crypto exchange Coinbase is skyrocketing in the opposite direction. On Tuesday, the San Francisco-based company announced a $300 million fundraising round that puts Coinbase's new valuation at $8 billion. That's a five-fold increase from its 2017 valuation, putting it well above companies like Slack and Instacart. And now, according to Bloomberg's analysis, Coinbase is expecting to bring in nearly $1.3 billion in revenue this year. Joining us here in San Francisco is Coinbase President and COO Asif Hirji, and in New York, Bloomberg Technology's Julie Verhage. Thanks so much for joining us.
Pleasure to be here.
Now, we mentioned in our story, according to you, that you didn't need to go out and seek to raise funding. So
That's right.
Why did you end up deciding to take such a large amount of capital?
That's a good question. So we were approached by some very high quality investors earlier this year who have a very constructive thesis on crypto, and they wanted to invest in what they thought was the best name in the space. And so when that opportunity presents itself, you take it seriously. And so we looked at it, and even though we didn't need to raise the money, we felt it was important to have, Tiger and some of the others in this round, as we think they can help us build the next phase of the company with us.
Now, Asif, I know you said you can't comment on specific revenue figures, but you've launched a number of new products that were towards the end of this year. What are your thoughts on, what Coinbase Custody, Coinbase Institutional, how does that impact revenues moving forward? Is that going to be a big chunk of that?
Yeah, I think over time, each of those businesses we would expect to do more than its fair share, and we would expect those businesses to also diversify our revenue stream. So our revenues currently are 100% transactional. The custody business and other businesses are more fee-based or AUM-based, and so what you will see is that will grow as part of our overall revenue, which gives us more stability and predictability to our revenue stream.
Now, the company has been growing dramatically, recording profit, expanding the business. So speaking of 2019, should we expect to see an IPO?
There's not going to be an IPO anytime soon. I think we have so much to do. I mean, at some point, yes, we will go public, but that's not even close to the top of the list of things we're worried about right now.
When you say so much to do, what are the top priorities before you have a public offering?
So look, I think just from a financial point of view, we want to diversify our revenue streams, as I just talked about, to have a more predictable revenue, right? The PE of an asset manager or a custodian is much higher than the PE of a broker, which is much higher than the PE of an exchange. And we're in all those businesses, right? So just to set context, we're a broker, an exchange, and a custodian, but our fee structure at the moment is 100% transactional, and that will morph as time goes.
Yeah,
so that's the first thing.
One thing that you mentioned, earlier this year, you launched the index fund. What did you guys learn from that? Because that was something that didn't work out, as planned, as you've been trying to diversify the revenue stream, as you mentioned.
Yeah, no, actually, I wouldn't say it didn't work out. I think what happened is we launched the index fund in the index, and we went with plan A, let's call it that, which was let's bring on institutions, let's bring on family offices and RIAs and so on. And what we found was it was a much bigger hill to climb in terms of the regulatory requirements to do that. And so we think it's actually more efficient to offer it through consumer. We rebranded it, called it Coinbase Bundles. It is out there now as a one-click, almost a robo-advisor type product. It's available to our consumers. It's available to institutions if they want it that way. It's a much simpler and faster way of deploying the same thing. And so it's literally that path was too hard given the regulatory environment. This path is much easier and actually creates more value for the customer. So that's why we did that.
Now, by some estimates, the number of U.S. users trading on the Coinbase platform has fallen roughly 80% since the peak of Bitcoin prices. So what are you seeing amongst your client base in terms of trading volume, activity?
Sure. So volume is going to move in line with where crypto prices are, right? So that's true of every exchange, every broker. we actually find that the number of engaged active users, so people who are coming to the site, checking prices, et cetera, that continues to increase. We continue to gain customers every month and every day, which we're proud of. The focus at the moment is on broadening out the base of products that we offer and also accelerating what we think is the next phase of crypto, which is the utility phase. So every technology, you go through an investment phase and the utility phase. We're in the investment phase right now, but our mission is to create a more open financial system for the world, and in doing that, we're driving things like the stablecoin we just announced or our wallet product. We think these can fundamentally benefit people who are currently unbanked and underrepresented throughout the world, be that in the US or somewhere else.
And you've talked about Coinbase adding more assets to the platform. Right. Recently, 5 in particular were reported. What's the timing around that?
Well, you should expect us to add, there are somewhere between 2,000 and 3,000 cryptocurrencies out there. Let's assume that 90% of them are garbage. That still means that 10%, there's somewhere between 200 and 300 that are legitimately worth investing in, legitimately worth taking part in. We offer 7. Right? And so you should expect us to go from 7 to that total number that we think is worth it over the next, call it, year or so. We will add those. We're going to add them geography by geography because the U.S., frankly, has not kept pace with where regulation is throughout the world. And so some things will be offered in the U.S., but more things will probably be offered outside the U.S. But over the next year, you should expect us to offer most of those that are worthy of being offered.
What has institutional demand looked like? Because when you guys launched it, Coinbase was around, but crypto was falling in value. And I'd just love to know, is there a lot of demand out there? Because the retail demand has pulled back, but I wonder what Wall Street and other, hedge funds are thinking about this space.
Yeah, look, we get more and more demand from traditional Wall Street and from what institutions every day. So the biggest impediment for most of them is they need a custodian, right? They need a qualified custodian that can safely store crypto. We've been doing it for longer than anybody else. We store more of it than anybody else. We have the best track record in the industry, which is why they came to us last year and said, can you become a qualified custodian so we can participate in this marketplace? And so that's why we're very proud to launch Coinbase Custody. That's the prerequisite, if you will. And then we've got a suite of institutional products that we offer for those institutions, and that's where they're onboarding. There's a lot of quant shops that are already trading crypto. Crypto is no different than any other asset they trade in the sense that it throws off a data exhaust that they can mine. Long short funds are starting to trade it too. I think the long only guys are going to be later, but certainly there are big parts of Wall Street that are already trading crypto today.
All right, Coinbase President and CEO Asif Hirji and Bloomberg Technologies Julie Verhage, thank you both for joining.
Thank you for asking.
Coming up, we continue to bring you the latest out of Facebook's earnings call. Sheryl Sandberg on the call just now, illustrating how they're bringing ads into messaging, which is a very important avenue of growth going forward. Facebook shares continuing to fall, now down nearly 4% in after-hours trading. We'll stay on the headlines. This is Bloomberg. This is Bloomberg Technology. I'm Selena Wang in San Francisco, and for Emily Chang. Back to our top story. Facebook's underwhelming third quarter earnings. Sheryl Sandberg on the call now, touting a tool that turns horizontal ads into vertical ads so they can work within Instagram stories. Now, earlier, CEO Mark Zuckerberg spoke about the competition.
Our biggest competitor by far is iMessage. And in important countries like the US, where the iPhone is strong, Apple bundles iMessage as a default texting app and is still ahead. In countries where there's more competition between iOS and Android, like much of Europe, people tend to prefer our services.
Back with us, Techonomy founder and guest host of the hour, David Kirkpatrick. Also joining us, Alistair Barr of Bloomberg Technology. Now, we heard Zuckerberg just then talking about competitors, iMessage, YouTube. This seems pretty unprecedented to talk about competitors during an earnings call. I mean, what's your take on that?
Yeah, it's very rare for executives to talk about competitors. One of the things that the investors aren't liking right now is this idea that really Zuckerberg is going from the news feed, which made vast amounts of money in the last few years. Everyone knows what that is. Everyone knows how that works. And now he's talking about how they're going to make money, try and make money from messages, WhatsApp, and also from stories on Instagram. Investors aren't quite so sure how profitable those types of ads and that type of content will be. So there's a big question mark about it. And he was saying, Zuckerberg was saying, basically the next year is going to be another big investment year focused on those two new things.
And David, shares are tanking right now. Are investors confident that they can monetize those platforms like WhatsApp and Instagram when they no longer have the founders at the helm?
Well, if investors were confident, they probably wouldn't be tanking the stock right now, so clearly not. I think there are unusual number of question marks surrounding Facebook right now, so I don't think investors are confident about much of anything, except if the problems were solved, this could still be the best money machine anybody ever saw, because that's basically been what it's been for the last several years. But it is a moment of enormous gray uncertainty around Facebook right now. It is shocking to me that Zuckerberg called out iMessage as their biggest competitor in messaging. I mean, I think that's partly because he's been really burned by Tim Cook's criticisms of Facebook, and he's trying to say, oh, the only reason Tim Cook is criticizing us is because he's competing with us, which is frankly, in my opinion, kind of a cop-out. It's absolutely unprecedented for him to have said that.
And when it comes to WhatsApp and Instagram, I mean, what more have we learned about what they're doing in terms of embedding ads into the services and the security of the product?
Yeah, I think that those comments from Sheryl Sandberg show that really she is getting down into the nitty-gritty of how ads are going to show up in WhatsApp. Before this quarter, I think most of the conversation was, oh, we are going to monetize it in general now. We're not sure exactly how. But no, when you see Sandberg really focusing on it, she's the operations person. She's the advertising expert who actually does the nitty-gritty. So that shows that they're really thinking about it and moving along. But again, there's still a question mark about how much money they're going to make from this, especially compared to the newsfeed.
Right, and David, I want to take a listen now to what Zuckerberg said earlier on the call about security on WhatsApp.
It's worth noting that one of the main reasons people prefer our services, especially WhatsApp, is because of its stronger record on privacy. WhatsApp is completely end-to-end encrypted, does not store your messages, and doesn't store the keys to your messages in China or anywhere else. And this is important because if our systems can't see your messages, then that means that governments and bad actors won't be able to access them through us either.
Now, we just heard Zuckerberg sort of touting the privacy controls on WhatsApp. Does that appease users and investors at all when it comes to the slew of privacy breaches they've been facing over the past few months on the core Facebook platform?
Probably not. I think it, again, interestingly, seems to be direct. It's sort of a backhanded criticism of Apple for allowing the Chinese government access to Apple products in China, and he's sort of presenting himself as holier than thou. I mean, the real problems with WhatsApp, in my opinion, are its use as a broadcast tool for political manipulation and propaganda in places like Brazil, India, etc. So far, we haven't heard much about what is really the #1 issue surrounding Facebook, which is how it is being used to undermine democratic society around the world. I mean, we're in the middle of a 2-part documentary on PBS that last night was an unremitting attack on this company, and they're acting like none of this is even happening.
Ali, lastly, I'm just looking at our Top Live blog. The CFO is saying that they're going to get more user growth from parts of the world where Facebook makes less money. That doesn't seem to bode well.
Yeah, that's right. Actually, these earnings, the earnings that actually came out in the third quarter, kind of blew away analyst estimates, partly because they still managed to get a lot of growth in the US and Canada. But yeah, that's another big concern. You've got on the product side, unknown products, how that's going to monetize, and then on the growth side, you have new countries where the people aren't quite as wealthy, and the advertising markets are less lucrative. So 2 big question marks going forward.
All right, well, we'll stick with Facebook earnings later in the hour. Alistair Barr of Bloomberg Technology, thanks for joining. David Kirkpatrick of Techonomy, founder and guest host of the hour. We'll see you a bit later. Now, Jeff Bezos has set off a new wealth record, but not the kind he's used to. Bezos saw his personal fortune fall by more than $19 billion over the past 2 trading days alone. That's the most ever in such a period, according to the Bloomberg Billionaires Index. Mark Zuckerberg held the previous record, losing more than $16 billion in July on the heels of disappointing Facebook results. Joining us to discuss is Bloomberg cross-asset reporter Sarah Ponzik. Now, Sarah, Amazon did issue disappointing revenue and profit forecasts for the holiday period, but some analysts are saying that investors are missing the point about the growth story here. Are they overreacting?
Right. So what's interesting here is I think a lot of investors would say, as we are seeing growth roll over, many investors are probably overreacting. It's not just Amazon. Yes, the numbers are absolutely astounding, down about 25% since the September high. It's lost about a quarter of its market value. So yes, that's very, very notable. But it's not just Amazon that's been leading the leg lower. We've seen all the other FANG names lower as well, and really tech broadly. We've seen value start to outperform and growth really start to take a step back. So a lot of investors are saying that people need to come to their senses. People need to realize that, yes, the likes of Amazon did miss on revenue, maybe give a disappointing profit forecast for the holiday season, but things aren't really much worse than they were, and the fundamentals mostly are still in place. So if you really believe in these companies going forwards, what so much has changed on that level?
And let's take a look at Facebook right now. Shares have really been all over the place in the past hour, down 6%, up 2%, then down 7%, and now flat. What's going on here?
Investors are trying to figure out what's going on here. I mean, immediately after the earnings release, it seemed like Facebook was going to take a bit of a leg higher. Then all of a sudden, it is dragged lower. And it seems like investors just are very fickle and jittery, and they don't know what they want. Even if you look at the market as a whole and its performance today, you take a look at the S&P 500. Yes, it finished up more than 1.5%, but it had 5 intraday swings of at least 1%. So that just shows you that investors, they aren't really they don't have a consensus of where the market should be going, where these stocks should be going right now. They're trying to figure it out, but at the same time, you're facing this headwind of this selling pressure that we've seen over the last month, and you don't know if you want to catch this falling knife and actually get in, and we're seeing that at the broad index level, but also, as you can see with Facebook, at a single stock level as well.
Right, even companies that have reported stellar earnings aren't changing sentiment, and the S&P is still moving towards its worst monthly performance since the bull market began. I mean, what is it going to take to be a true catalyst here?
We've been looking for catalysts, and I've been asking this question every single day to every investor I speak with. What is the next catalyst? What is the leg higher? Because the fact of the matter is, if you look at the economic data, yes, it's great, but a lot of people say, well, is this the best that it gets? It's the same thing with earnings. A lot of people are saying if we do get something on the trade front, maybe that will help us higher, but many aren't expecting that to happen until at least after the midterm elections. And at the same time, with President Trump coming out yesterday saying that they are ready to tax the rest of those imports from China on those goods, it looks like it will probably get worse before it gets better. So in the meantime, we're sitting here with markets languishing. Not today, they were higher, but still, investors are trying to figure out what the next catalyst is higher, and if they want to be positioned for a market, in this market that has just been so downtrodden in October, if there really isn't that material catalyst that is so clear and at the forefront.
Well, Bloomberg's Sarah Ponzik, thanks for joining us. Bloomberg has learned that XILINX has won orders for Microsoft's Azure cloud unit, thereby replacing chips made by Intel. Their programmable chips are increasingly being used in data centers, and Azure will use them as co-processors in more than half of its servers. This business had been an exclusive for Intel's Altera unit. Coming up, T-Mobile is taking on its rivals with promises of 5G through a potential merger with Sprint. But what would that mean for the prepaid market? Up next, this is Bloomberg. And CEO Mark Zuckerberg was on the Facebook call talking about the year ahead. Let's take a listen.
We're also heavily investing in AR and VR, as well as hardware for bringing people closer together, like Portal for video presence and Oculus Quest, the all-in-one VR experience that delivers Rift-like quality with no wires attached. So with all of this ahead, I expect 2019 to be another year of significant investment.
Sony has upgraded its earnings outlook for a second straight quarter as its PlayStation business continues to thrive. The Tokyo-based company said that revenue will be 8.7 trillion yen compared to the previous outlook of 8.6 trillion. CFO Hiroki Totoki says the optimism is being fueled by video game success during a year of uncertainty for smartphones.
The smartphone market is very competitive, and our product appeal is not as strong as it should be. Our new management team is working on rebuilding our brand through cost cutting, narrowing of scope, structural reform, and improving our product competitiveness.
And T-Mobile reported third-quarter earnings Tuesday, delivering what CEO John Legere called its best financials ever. The phone carrier rallied after adding millions of monthly subscribers, and T-Mobile also posted $10.8 billion in revenue, beating analyst expectations of $10.75 billion. Though the company is still distant rival to Verizon and AT&T, the latest results give the company fresh momentum as it awaits federal approval for its $26.5 billion acquisition of Sprint. Here to discuss is T-Mobile President Mike Sievert from Bellevue, Washington. Mike, congratulations on the positive earnings. What's driving the subscriber growth?
Thanks, Selena. It's great to be here, and I can only assume that you're wearing magenta today for the same reason that I am, which is to celebrate T-Mobile's record quarter. So thank you for that. Listen, the brand is really performing. You know, our network is second to none. Our customer service is delivering fame and notoriety to our company. Our team is firing on all cylinders, and you see it in today's record revenues, record EBITDA, and 47% year-over-year growth in cash flows. And it's all on the strength of subscriber gains that, get this, our postpaid phone subscriber gains are more than AT&T's, Verizon's, Sprint's, Comcast's, and Charter's combined. So that was a big quarter, and we're excited about it.
Now, last year, T-Mobile acquired Layer 3 TV to jump into the online TV service. Can you give us some insights into how development has been, what the timing will be like?
Absolutely. We're busily building TV for the 5G era. And that's important because with the new T-Mobile, we will have an ability to bring broadband service to 52% of U.S. zip codes through 5G. That's amazing because, you know, broadband is the most uncompetitive market out there. Half of broadband customers out there have no choice at all. They have one or less options. That's crazy in 2018. So we're going after it in the new T-Mobile. And in order to do that, we're going to need a TV service that frees customers from wires forever, frees them from any particular cable box, and allows them to experience high definition in a way they never could before, in a way that has met their phone, their social media life, and has it all integrated in a contemporary package. So we're busy building that. The journey starts later this year, and it'll continue over the next couple of years as we build more and more.
Could we see an offering to customers by early next year?
Well, it's already out there under its former brand, Layer 3 TV. You're going to see it recrafted with new features and new capabilities and some new news later this year. And then on into next year, you're going to see it transformed into a mobile capability with a different take on the market than I think we've seen before. You know, we're not interested in just replicating what everybody else has done in this space.
Now, T-Mobile announced earlier this year that 5G would be rolling out to dozens of cities. When will we see the first phone supported by 5G at T-Mobile?
Around the middle of next year is when you'll see them supported for all the carriers. And everybody's going to get them around the same times because they're based on standards technologies. And then on into later in the year, you're going to see it supporting a particular strategy that's completely different than anything AT&T or Verizon are doing, which is our 600 megahertz low-band spectrum will be supported in phones for 5G. Now, this is important because the other guys are doing 5G in certain parts of certain cities. Our view is that 5G is so transformational, it ought to be for everyone, literally everyone nationwide. And only T-Mobile is pursuing a strategy of true nationwide 5G using our low-band spectrum, and we're going to be national by 2020. So it's coming faster than most people think.
And Mike, what's the latest on this proposed regulatory review for the merger with Sprint? I mean, there were recent reports that the New York Attorney General's office is stepping up its probe over concerns that it could lead to price hikes on the cheaper prepaid phones.
Well, that's entirely expected. You know, our view is that it's going really well. And, you know, we expected both the federal government and the state governments to take a close look at this. And they need to. And the closer they look at it, the better it is for us. Because, you know, we've submitted 25 million pages of documents and 1,000 pages of econometrics to support a pretty simple proposition, that the synergies of this merger are so profound that they're going to allow us to create an unprecedented network with capacity that is on a level Americans have never seen before. And prices and competition are a function of capacity. More capacity means lower prices. So the more the state governments or the federal government dig into the details, as was reported they're doing, the better it is for our case. So we're gratified that they're taking a close fact-based, data-based look, and we're respectfully participating in the process.
Now, I want to dig a little deeper into what you just said. How exactly will mobile prices not go up if the number of carriers shrinks to 3? Just walk us quickly through how exactly that works.
Well, in a typical situation when you see mergers in an industry, what drives up prices is the elimination of capacity in that industry. Eliminating a competitor means eliminating all their factors of production. This merger's the exact opposite. What's going to happen is the two combined companies will have a capacity that is 8 times higher than the combination of standalone Sprint and T-Mobile. It's an explosion of network capacity. What's that do? It gives us every economic incentive to use that capacity to bring more competition and lower prices to take customers from AT&T and Verizon. So every American's going to benefit here, postpaid, prepaid, and whether or not they're with the new T-Mobile. Customers over at AT&T and Verizon will benefit too, because you can bet with what we're bringing, they're going to have to respond.
All right, T-Mobile President Mike Sievert, thanks so much for joining. And questions from analysts have begun on the Facebook call, with CEO Mark Zuckerberg saying, quote, "Our journey into video has been a little bit funny. People want to watch a lot of video, but we've had to limit it because passive video watching have displaced social interactions," essentially saying he doesn't want to be YouTube. Now they're letting video grow again, with shares getting whiplashed in after hours, now up almost 5%. We'll stay on the headlines. This is Bloomberg. Back to our top story, Facebook third quarter earnings results, reporting quarterly revenue roughly in line with expectations and profit that beat analyst forecasts. CEO Sheryl Sandberg is answering questions right now in the earnings call, saying Instagram shopping is seeing nice growth. Earlier, CEO Mark Zuckerberg discussed investment opportunities and how the company will need to look at costs. Joining us now is Jitendra Worrell of Bloomberg Intelligence, and still with us, our guest host of the hour, David Kirkpatrick. Jitendra, I want to start out with some things that were mentioned on the call. It sounds like investments are going to continue to increase, but what did we learn about how successful their massive investments into hiring human content moderators has been in terms of fake news, abuse, manipulation?
Well, they claim they've made a lot of progress. It's much better than before, but obviously it's not out of the woods yet. Now, you have to remember that going into the quarter, the expectations were very low. I mean, we've seen the stock reaction in the last 2 months. What the volatility that you saw was essentially just, the worries about how much growth is going to slow, how much expenses are going to grow. And then if you look at the 4Q guidance that they gave, was a little better than expected. So that's why you saw that whiplash happening. But what we are seeing right now is Facebook is going through a transition year. They're transitioning to newsfeed, from newsfeed to live stories, better monetization of video in terms of pricing and things like that. So this transition is what's going to cause this expense uncertainty and growth uncertainty in 2019. And so 2019 is going to be that uncertain year, if you may, from those two angles.
And speaking of that transition, I want us to take a quick listen to what Zuckerberg said on the call about this expense issue.
I want you to know that looking out beyond 2019, I know that we need to make sure our costs and revenue are better matched over time, and that's something that I'm focused on as well.
Now, David, it seems like Facebook is forever going to be caught between Wall Street and society. Has it shown that it can properly grow revenue and profits while properly dealing with the societal issues of undermining real news and discussion and democracy in society?
It absolutely has not shown that. I think there's no evidence that they are really directly addressing that. I don't even know what it means that our revenue and profits ought to be more, revenue and expenses ought to be more matched going forward. That's a weirdly opaque sort of formulation. I think that we are just beginning to see, outsiders, all the different ways that Facebook can undermine social dialogue. Facebook itself doesn't seem to be discovering any of these things on its own and telling us about it, or to the degree they do, they just hide it, and they're extremely reactive. They are making progress. They're spending a lot of money, but I think we are just at the beginning of an incredibly painful, long journey of trying to remediate the problems that this service is bringing on society, even as they're raking in the dough through stories and all these things they're doing. More power to them on the money side, but they better solve these social problems or they're in big social trouble.
And what is the biggest test for Facebook next? Is it the next earnings call, or is it this upcoming midterm election?
Well, I think the midterm election in the United States is important, but look, there's elections all over the world. WhatsApp was a major factor in the election of this ultra-right-wing new leader in Brazil, Bolsonaro. His son was kicked off WhatsApp because of abuse of WhatsApp. The way WhatsApp is being used is a major new force globally. So it's not, we Americans tend to focus too much on the U.S. election, although it's hugely important. And increasingly, it looks like Facebook manipulation by the Russians may have been the thing that put Trump over the top. But anyway, there's innumerable issues. We have to see what happens next week. We also have to keep our eye out globally. I wish Facebook could do it for us because it's their service. They did this to us, and they're not remediating it. I know I sound fairly harsh, but I feel harsh.
Well, Techonomy founder, Bloomberg contributor, and guest host for the hour, David Kirkpatrick, thank you for your candid thoughts as always, and thank you also, Bloomberg Intelligence, Jitendra Warrell. That does it for this edition of Bloomberg Technology. This is Bloomberg.